Welcome back. Wonderful to be here again with you. I'm Nadine Blaney from AusBiz. The next company we'll be speaking with is Propell. So Propell is an Australian fintech offering intelligent financial solutions for improving SME cash flow. So what it does, it combines a one-on-one platform, combining a one platform lending for operating growth, instant payment receipts. So all of this on one platform, as well as third-party products. It has multiple additional products that are still under development, including, here's a hot word, buy now, pay later, invoice finance, and cash flow forecasting tools. So the platform leverages data and AI to automate assessment to deliver a purely digital product for SMEs to engage with. The platform currently is serving about 430 customers, with customers utilizing their lending, payments, or both features. Just a reminder as well that if you would like to submit any questions from the audience, you can do so, and we will get to those at the end of the presentation. All you have to do is type it using the Q&A panel on your screen. So without further ado, let's hand over to Michael Davidson, who is the founder and CEO of Propell.
Thanks, Nadine. Hi everyone. Thanks for jumping on. I'll jump straight in, given that we've got only 30 minutes. And as Nadine mentioned, you can have Q&A a little later on. So I guess I'll take you through quickly a bit about Propell, who we are, what we're doing, the challenges our customers are facing and then how we're solving that, and the growth we've seen to date, and then finally around the investment opportunity. Now, it's important to note our IPO book is closed and was heavily oversubscribed. The allocations are complete with settlement concluding next Monday, which is coming. And we're presenting today mainly for informational purposes, but essentially to give those that are interested some insight into the business and the story before we list in the coming weeks. So straight into who is Propell. Nadine actually covered most of it, but essentially we're a digital finance platform for SMEs. We offer tailored finance products to those customers to help them manage and optimize their cash flow. And we do it with both payments and lending now. We're able to do it because we've developed a platform that captures really extensive customer data. The platform then uses that data to both automate the assessment and the onboarding of those customers 100% digitally. Now, that's a good explanation. Best way I can show you though is we've done a quick video that will show the customer journey from signing up through to using our product. So I'll play that now and I'll come back in just after.
The Propell platform is an intelligent solution to help businesses manage their finances. A customer can set up an account all online in less than 7 minutes. Within the application, the customer enters basic business information and connects their bank account. Propell's AI then uses this real-time business data to accurately assess and approve a customer in as little as 15 minutes. Once approved, the customer has immediate access to a loan facility and Propell's instant customer payment solution. For example, a customer with a pre-approved credit facility requests to draw down funds so he can buy materials. He is shown his repayment schedule, accepts the terms, and the funds are deposited into his bank account soon after, often the same day. Now, with the funds available to commence the work, he could request payment from his customer, who is able to pay him in just a few clicks on their smartphone, using any of the major payment types, including Visa, MasterCard, debit card, and more. Access to funds coupled with fast payments improves his business cash flow, allowing him to keep his business moving forward. Propell supports customers to better manage their finances with quick and seamless lending and payment solutions. Finance that moves you forward.
Great, so just before I jump into the problem we're solving, just a high-level summary of the business and the opportunity. This is an established platform. It's in market now and acquiring customers. It's an intelligent solution with unique tech, as I mentioned, combining payments and lending. And it's really important to note this is proprietary. We built this in-house, and the platform combines both in-house products and third-party. It's also highly efficient, both from a customer sign-up point of view, but also for our team to be able to onboard those customers and then scale. We're in a cracking market. It's a large addressable market. There's more than 2 million target customers in Australia alone in our target segment, and more than 55 million just in key Western markets, so the US, UK, and Europe. We've got a really well-defined growth strategy for both customer growth, but also growth of the product and the platform. and really well understood metrics. And there's really two main levers for driving growth of this business moving forward. And I'll dive into them further later on, but I just want to talk about them now. The first is growth of customers. As Nadine mentioned, we're sitting at around 450, 500 active customers on the platform now. We expect with these funds raised to grow that to between 3,000 and 4,000 in the coming couple of years. And then on the growth in revenue per customer side, a typical business sits at around 3,000 revenue per year, and we expect to grow that to more than 8,000. Now, it's important to note around this as well, these aren't just assumptions. We have had both of these products in market in standalone form for a number of years, so they're relatively well understood metrics. Now, it's combining those two that will drive both significant revenue growth and then value growth in the organisation. And lastly, and probably most importantly, is we've got a really great team, both from the board right through to the team that are delivering on the ground, and with really deep experience in both finance and technology. And that's essential when you're delivering something in this fintech space. So jumping into the problem we're solving. So what is pretty well understood is that it's difficult to own and operate a SME. You've usually got one or two owners that have to wear many, if not all, of the hats in the business. What is not as well understood is that they also struggle to manage their finances, and it falls into really three spaces. Firstly, they really struggle to manage cash flow. You know, in most cases, the owners we've found don't understand the relationship between cash flow and profit, often using the two terms interchangeably. They're generally reactive and not proactive about managing the finances, usually meaning that they're identifying issues very late and are having to take really quick actions to solve it. And they have limited access to funds and services. They have limited financial knowledge and experience. In most cases, it's really to that point that there's one or two owners that are specialists in the field that they operate, but generally not finance. They rarely have in-house finance management and amazingly are reluctant to seek professional advice due to the perceived cost and benefit, and very time poor for those reasons. And finally, they have difficulty accessing the services, products and services that they need. You know, banks have traditionally viewed these SMEs as high risk and hard to service. And of the products, you can see at the bottom of the screen there, just an example of the types of finance products that a standard SME should be using. There's a whole range, but the providers normally only deliver one type of product, meaning that time poor SME owner has to research, sign up for, implement, and maintain a range of relationships just to solve their finance problems. Now, this is where Propell, this is where we saw the gap in the market, but in turn, the opportunity to pull that together. So jumping into how we actually solve the problem. Now, you saw the product in the video at the start and how customer experiences. I'm just going to talk a bit about how it's actually delivered behind the scenes. So that SME customer comes into contact with Propell, and they go through the application form. Now, we said there it takes around 7 minutes on average. It can be a lot faster, being that it's entirely digital. We had a record the other day of just under 4 minutes, about 3 minutes and 43 seconds. Now, that captures really extensive data about the customer. Importantly, it captures a snapshot at the time, but we also connect to some of their key financial information and we stay connected to it. And I'll talk about why that's really important shortly. We pull all that information into our platform, and our platform's engine then gives us a profile of the customer about the type of business they are, how they operate, and the risk profile of them. From there, we then suggest, and it's automated suggestion of the products that they should be using, but also automated onboarding. So if that customer is improved, they have automated onboarding and they're thrown straight into, or given directions to be able to use their portal, both on mobile and desktop, but then also the native applications. Now, as I mentioned, they're essentially on board at that point. And it's really important to mention that we stay connected to their information. It's important for two reasons. One is we're able to see the health of the business over time and how it changes. That's really important when you've lent someone money. But more importantly, moving forward, is that we're able to see how that business changes over time and the characteristics of the business if they're growing, and what products and services they should be using, and what we can place in front of them from there. Now, that's how we do it. Going into the products that are sitting on the platform right now, we currently have a lending product and a payments product. The lending product is a 6-month line of credit that offers up to 100,000 in funds to those SMEs. This is a product we've had in a standalone form for some time. We've lent more than $16 million over years at a demonstrated default rate of around 4%, which is market leading. It's a proprietary credit model. This is something we developed in-house and we monitor and maintain using it. And importantly, it risk prices the customer both for the rate that they should pay, but also for the size of the line of credit that they're capable of repaying. And as I mentioned, it's continually monitored. Now, on the payment side, we've developed a hybrid version of our payment product that specifically solves the need of these SMEs. I mentioned earlier on, you may have seen the note that one of the issues with cash flow with SMEs is that they get paid quite slowly, amazingly. Australian businesses are apparently notorious for paying late, but actually most of the problem is that the average SME hasn't made it easy for their customer to pay them. So we pull this together in a very simple product that allows them to take payment on a credit, debit, or digital wallet currently for just a low transaction fee of 1.75%. And there's no hardware and therefore no hardware costs and no account cost for this. So they only pay for what they use. Now, as I mentioned, we talked earlier about buy now, pay later. The goal of this product is for the SME not to have to become an expert in payments and for us to just aggregate all the payment types. And we're launching our first buy now, pay later on the payment product in this first half of 2021. So they're two products. And just really simply around the revenue model, the lending revenue model, on average across the base, the interest rate annualized sits at about 27%, and we net about 50% of that fee. And on the payment side, it's 1.75% transaction fee, and we net about 30% there, just to give insights into the drivers. Now that's the product and how they get access to it. I'll just talk a bit about growth in both customers, but also then growth in product. So on the growth side, we have shown experience acquiring customers on both the standalone products and the platform, servicing over 1,200 customers to date. And we've seen those numbers start to increase rapidly with the launch of the platform mid-2020. Now, just on that point, whilst we launched, we did take a very cautious approach to both acquiring customers and originating loans through the middle of 2020, just a really uncertain time in business and the economy. But we have seen those numbers ramp, as you can see in Q4, and we're also seeing that flow on through Q1. Now, acquiring customers is one thing, but it's also very important how you acquire them. That's probably unsurprisingly the type of business that is interested in this product and that it suits spends a lot of their time online. So we have focused a lot of our marketing in that online space. From an outbound point of view, we focus on paid search and search retargeting, but also social media and social media post promotion. Now, online, you generally close less than half of your sales on the first interaction with the customer. So the team has built out a really sophisticated and automated lead nurture system that closes more than half of our sales. And that is something that takes that interest that the customer has shown from that initial contact and cultivates them back to the product and the platform over time. Now, we take a really data-driven approach, and digital allows you to do that. So that we can get in front of just those businesses and those customers that suit this product. And it's allowed us to drive a demonstrated low acquisition cost for those customers. And it's currently sitting, based on typical revenue, at less than 6-month payback per customer. Now that's on the actual customer growth side. As I mentioned, equally as importantly, and that second lever is around how will this product and platform grow moving forward. And there's really two key themes to what will be delivered on the product side over the coming year. One is around helping SMEs proactively manage their finances, essentially freeing them to focus on their business and not on the finance side. And there's two products we'll deliver there. One is around business insights. It's just taking that extensive customer data and reflecting that back to the customer and giving them some insights into the health of their business and financial wellness, essentially. Also comparing them to industry and competitor peers. Now, the second piece, which I'm most excited about, is then the proactive financial tools off the back of it. So we can derive a lot of insights from those business insights feature. The next feature will then be giving them actionable guidance around actions they can take that can improve the financial health of the business, but also products that they can use. So essentially suggesting relevant products to help them improve the wellness. Now that's on the qualitative side. The second piece is then driving additional products onto the platform. And on this side, it also takes two themes at this point. Around the payment side, we need to increase the schemes that customers can pay with. So we currently have Visa, MasterCard, the majors on credit card. As I mentioned a couple of times, we'll be delivering our first buy now, pay later in the first half. And we're expecting that we'll deliver a whole lot more. There's been an explosion in that side of how customers want to pay and businesses want to take payment. And we see ourselves as being central to solving that problem for our customers. But then we also need to increase the ways that they can pay. And we'll be launching online invoice payment shortly. And then also we have 2 products in process where customers will be able to accept card on phone payment. It's quite exciting there as well. That's on the payment side. Then on the lending side, there's a lot of demand already for longer term lines of credit. So we'll do longer duration lines of credit, 12-month product. But then also invoice factoring, there's a lot of demand in this SME space, and also emerging cash advance product. And then finally, really, and a piece that will wrap it up for that customer is we're going to deliver a SME account card and a SME account and card, a Propell branded SME account and card that allows that business to then essentially live their financial life in the Propell ecosystem. Now, the delivery of those is one piece. Equally as important is when will they land and what will the impact be on revenue? And I've mentioned around how we expect to drive revenues, but right now we drive revenue off card processing fees, and that the fee I mentioned earlier, about 30% of the merchant service fee, and then on the net interest margin on the loans. The buy now, pay later will land in the first half of 2021. And important to note here that the actual margin on BNPLs is generally higher than you see in card. So we expect to have that a positive impact on the margins on payments transactions. And as we build out the full suite payment services, we're looking at introducing a subscription fee for that full payment suite. On the lending side, we'll deliver both longer dated in-house lines of credit, but then third-party products around invoice financing, which will drive incremental net interest margin. And finally, just on the insights and the qualitative piece for the SME, we expect that we'll be delivering a subscription fee for both of those services as we build them out and start to deliver real value to the customer. Now, to really sum it all up and simplify it, again, I was talking about the increase in revenue for those customers and breaking it down simply. On the payment side, we expect to see average transactional volumes per customer to increase from about $4,000 to about $20,000 per month per customer. And that will be off the back of just moving from a single use case payment service right now to become the core of their payment processing. And then on the lending side, with the longer dated lines of credit and additional products, we expect to see the average lending or loan for a customer to increase from about $9,500 to about $20,000. And those combined is what delivers that increase from $3,000 to more than $8,000 in average revenue per customer per year. Moving on to the investment opportunity, as I mentioned, and I won't labour this slide too much, all the information is available in our prospectus on our site. But just, I guess the important point here is around the use of funds and how we expect to use it. So probably unsurprisingly, we're focusing the funds that we raise on driving those 2 levers. So the largest chunk is going directly to customer acquisition, and it's over half, or just under half, of the funds raised. But equally importantly, and a slightly smaller chunk is going towards building out the platform and the product. Now, as I mentioned, that the round has closed, but and it will be listing shortly. Now, really just summing up the opportunity, we have a great product in a great segment of the market that's supported by a great team. It's a really straightforward business model with straightforward metrics and well understood levers around that customer and revenue growth. And importantly, a really well-defined product roadmap. And some of the highlights you'll see over the coming months will be around that, launching that first buy now, pay later on the payment side, with many more to come. The new lending products landing, the longer dated line of credit, and also that invoice financing will happen shortly, and it'll all be supported by a new wholesale debt facility. So as you can probably imagine, with all of this going on, we're really excited about this next phase and very excited that we've raised the funds to be able to drive this forward, and hope to see you involved. And that's it for me. Back to you, Nadine, for Q&A.
Yeah, I'm here, and we have some questions for you. So thank you for that presentation. We've got a question coming in, Michael, for you, saying from the lending side,
yep,
who is writing the lending risk? What would happen in the case of an SME loan default?
Yeah, so our wholesale facility currently, we cover the first 10% of the loss beyond that is with the wholesale facility. So in the case of we're currently, we set aside 6% for the loss rate. We have demonstrated over a number of years around 4%. So we're actually essentially setting aside too much and a long way below the limit.
Okay, next question is for SMEs in Australia, who is the dominant player or the incumbent for the payments and lending services that Propell provides? And so how do you think you're going to gain market share from them?
Yeah, and this is part of the issue, but also the opportunity with this space, is that traditionally it's been the big four have had the lion's share of SMEs. In the segment we're operating in that 50,000 to 2 million turnover, the banks have really served them quite poorly. They, as I mentioned earlier on, they've seen them as high risk and hard to service, so they haven't really served this segment. And then that other slide I showed where there is not one incumbent that covers the whole range. There are just individual players in segments. So the answer to the question is we're already seeing that we're taking a lot off the banks. The SMEs are looking for entirely digital, simple to use products, and they're not getting those from those traditional providers. So we're taking some from there, but we're also taking a lot from the individual providers because we're able to deliver a whole end-to-end service. It varies basically.
Okay, Michael, next question. How will the company grow its loan book if you do begin to start to win, a lot of new customers?
How will we grow the loan book? So I'm not sure I understand that. So essentially, the average, we have of customers that come on the platform, it's over 90% take a loan. So there's a pretty one-to-one relationship between growth in customers and growth in loan book. What we are seeing and we are forecasting, as you saw over time, is that the increase in the average size of loan will increase. So it has a multiplying effect. We're bringing on more customers and most of those take a lending facility. But in addition to that, those loan facilities are increasing in size. That's what will deliver that significant increase in loan book.
Next question for you, Michael. I guess it's about a catalyst post-listing. So what's the news flow look like post-listing? What will next be announced likely?
Yeah, so the points I mentioned around product developments, so that slide, all of those features that I discussed are landing in 2021. But the big highlights will be launching in the months just after listing will be around that buy now, pay later product on the payments platform and increases in the number of customers on the platform in general, but also those lending products, so around a longer dated line of credit, which generally are much higher value, again, contributing to that increase in loan size, and an invoice financing product will land. That last piece is just the new wholesale debt facility to support that growth.
Okay. This is a good one. So was there much of a COVID impact on the business? Perhaps with some SMEs hurting during the lockdown. And I suppose I could add to that saying, if you've got SMEs that have been helped out by stimulus, we're starting to see the roll off at JobKeeper toward the end of the month. What is your take on the
Yeah, it was funny. It was a bit of a two-speed economy through that. We had a lot that we saw a lot of applications come through for businesses that were struggling. But at the same time, we also had existing customers and new customers that were absolutely flying. We had a bicycle retailer in Perth that had seen turnover and sales increase significantly. I think their shop was essentially empty. So we saw a wide range. We took a cautious view, just where we were uncertain, we lent less. So it did have an impact in that respect. But in general, with 2 million SMEs in this segment in Australia, there is a lot that were performing well.
All right, well, that is all of the questions coming from the audience. Thank you for those. And thanks for the presentation, Michael Davidson. Look, exciting times for the company with the listing and everything to come. Founder and CEO of Propeller. Thank you so much for joining us.
Thank you.